Hello everyone, this is Dari. Hope you're well. Today we want to talk about how to trade in a period of economic and market shock. We will look at the current market environment, the two types of trading methods, which are range and trend. We look at three parts you can take in your approach, which method will work for this current environment, and we're looking at the technical analysis tool to determine the trend. We summarize and then we will reach a conclusion. So let us move forward. So the first thing we're going to look at is the current market environment. The initial shock from the coronavirus outbreak and the shutdown of much of the transportation and business system is both large and sudden. In terms of its scale, there is no parallel since the end of the Second World War. Now, let us first of all look at these two types of trading methods. Okay? They are the range and trend following method. They are essentially very different ways to trade the market. It is nearly impossible to trade range and trend with the same attitude and the same mindset. A different set of indicators and tools are needed, and the methods of generating entry signals, placing stops, and determining profit target are also different. Some indicators are great at showing trends and work excellently during trending markets, while others shine in a ranging market. Being profitable is always about using the appropriate methods and tools at the appropriate time. Now we are going to look at three different paths you can take in your approach. For these two approaches that we have mentioned earlier, there are basically three paths you can take. First part is to identify the state of the market, whether it is trending or range, and only trade in that market. Secondly, you can identify the state of the market but switch between a trend and a range trading system as appropriate. The third choice is you can simultaneously trade both methods, both trend and range methods at the same time. Okay? The question is, which method do I think it will work for this environment, this market condition? Given the situation we are right now, market movements are being directed by sentiments and emotions. They are also directed by government announcement and the status of the virus epidemics. So, it is safe to say that technical analysis has taken the back seat. It is therefore important to apply the right method. So, very shortly, we are going to be looking at some examples of charts. Forex, stocks, indices chart, and many more. You will see that the market is speedily heading in one direction. This is what I call trend with high volatility. So in my opinion, the appropriate method to employ right now is a trend trading strategy. Let's see some examples. This is stock market and this is 2020. Precisely, this is Dow Jones Industrial Average. You can see from 2017, it has been building steam, rising and building steams up until 2020, right? And from about 20,000, it built steam up to 30,000. Within 4 years, 3-4 years, it took it to build to that steam, to that level. And within few days and few weeks of trading this current March, we lost everything we have built, even more, over 4 years. one direction. Let's look at another example. This is Australian dollar against US dollar. We have seen that this currency, Australian dollar, is in a downtrend since 2018 against US due to the economic systems over there condition. However, in 2020, you can see a rapid acceleration downwards for this currency. Also one direction. Let's look at crude oil, for example, as well. Look at, this is 2020, around January 2020. This is February 2020. So in January, crude oil was trading at about $70 per barrel. Okay, $70. And this is March, is trading at that value, $33, which is less than half of what it was just about 2-3 months ago. So it has crashed over 50%. So we have seen in all these examples that the market has decided a direction and is speedily heading towards that direction. And as we know, we are not end of that speed yet. We are not end of that road yet. Market are still going to that trend. So it could be uptrend for some market, it could be downtrend for some market, but we are in a trend. Okay, so now the question is, what tools can we use to determine this trend? Okay, the moving average, the old moving average, we are going to use it to define the trend and as support and resistance. Okay, when you look at this chart, you can see two clearly defined trends. One is the uptrend, you can see there, and the other is the downtrend. So moving average are very good when there's a defined trend. So it's great to use it. And the second that will be used in support of the moving average is called the ADX, average directional movement. This is used to determine the strength of the trend. So ADX is not affected by the direction of the trend. Its only purpose is to show the health, how strong that trend is. The main idea with the ADX is to look for its value to be above 25 as a confirming sign that a trend is in place. The greater the ADX reading, the stronger the trend momentum is. Also, a falling ADX line is a sign that the trend is losing momentum, while a rising ADX can indicate the strengthening momentum. Let's quickly look at the ADX. Now, let's look at this ADX. You can see around here, ADX is gyrating around that 25 line. This is the middle line, 25 line. It's moving around that line. It shows it's a flat static market or ranging market, so you don't want to be here. However, let's see on this side. However, you see the value of ADX has ramped up rapidly to a figure of about 80, 87. Even down here, we still have about 50, 60, 45, thereabout around here. See, it's far away from the 25 line. So you want to be, as a trend trader, you want to be trading when the ADX is high, so you get a good accelerating trend. Okay, so let's summarize what we have learned in this short video. We've talked about the current market environment and how do we trade such in a turbulent time. We look at the two types of trading methods, range and trend. We look at three paths you can take and which method do I think will work for this current market condition. And we look at two technical tools we use to determine the trend. And in my conclusion, I will say it is much simpler to trade this market condition than you think. Combining both moving average and the ADX may be enough to trade this one directional trend that is currently prevailing in the market. Needless to say, however, you must constantly analyze the market to determine when the condition has changed and this method will no longer be optimal. So thank you so much for watching this video. I hope you have learned one or two things. More will be coming soon. Subscribe and like us on this channel. Thank you so much. Speak to you soon. It's Dari.